Hello traders, welcome back to Perts. Today we are diving into a very important topic called the trading plan. Having a trading plan is the minimum requirement for all of us to achieve consistency and profitability. In this video, we'll explore the key components of a trading plan and how to create one that suits your trading style. So grab your notepads and let's get started. What is trading plan? It is simply a strategy and set of guidelines that we need to follow to make informed and disciplined decisions in the stock market. Based on my experience, I have defined the trading plan with 5 key elements: type of trading, time frame, risk management, patience, and trade journal. In the first one, people trade based on different parameters like some technicals, some run fundamentals, some choose active trading during results season, events like Fed meeting, budget or economic indicator releases. And finally, some trade on news. I personally felt trading based on technicals is easier among all the other things because we see the historical charts and based upon that we take decisions. Whereas in other parameters, there is some uncertainty with the outcome and it would be difficult for us to make the decisions. But every method has its own risk and reward. You need to choose which type of trading you want to do and when you prefer to do. So that leads to our second key element, time frame. Here you can be a scalper, day trader, positional trader, swing trader or investor. For scalper, normally it would be like trading in a minute or two, or maybe even in fraction of seconds they might exit. So they patiently waiting for the momentum, and when it comes, they quickly enter and exit. But for this, you need to be highly skilled, not to just execute the trades in less than a minute, but to maintain the consistency in your profits through this method. It is a highly risky, but practice would help you getting this skill. Day trader, kind of scalping, but you would move your time frame from a minute to maybe 5 minute or 15 minute. You try to find the direction and get the momentum during the day. Positional trader on the other side will hold the trades for the next day or two when they expect the momentum or the trend will continue. But we will be exposed to gap ups or gap downs. Sometimes it would give nice profits and sometimes there will be unexpected losses. The swing trader focuses on the swing structure, might hold his positions from 2 days to few weeks. They wait for the specific target in terms of percentage, or they may hold until the trend reverses. Investors, the longer time frame here, the holding period can go up to months and years or even retirement. They might go through the entire market life cycle. So you need to define how you want to see yourself in trading career. Accordingly, you'll decide how much time you can give to your positions. But remember, all these trades will have one common thing, that is the risk of holding the positions. The profits can turn immediately into losses. All of us might have experienced this. There is no escape. So the only way you can control this would be through risk management. What if my trade goes wrong? Position sizing helps you here. Like the amount of capital you want to allocate to each trade. Usually if you take 1 to 2% of your capital as a risk per trade, then survival in this trading journey would be easier. If not, you know it, right? You will blow up the accounts sooner. So just think about the position size before you hit the buy button. The other thing is we must maintain stop loss orders in the system to avoid unexpected losses. On the other side, I also included what if trade goes in my favor. We are taking 1 to 2% risk and how much we should target. That is the question. From calculation point of view, 1:3 or 1:5 risk reward will put you in profits even if the win rate is from 20 to 30% like that. But from trade's perspective, it would be difficult for normal traders to accept 3 to 4 continuous losses. That's where our psychology gets hit and patience goes for toss. So in my view, we should definitely target the higher risk reward to survive. But we should also know whether that target is achievable based on the strategy that we are applying and what is the probability of getting that target. After doing all the probability calculations, getting the right strategy and setting the target, now the emotional element comes once you enter the trade. Although our target is 1:3, because of volatility of the market, probably many traders will exit so early that the target won't hit and also SL won't hit. This is mainly because of the lack of patience. That's the fourth element in our trading plan. The patience doesn't come overnight. It takes a lot of time, maybe years, to improve those patience levels. Having emotional balance is the most difficult task in trading. Before taking a trade, we need to patiently wait for our level, and once we enter, we need to have similar level of patience until we hit the target. If we lose the patience, our entire trading plan goes for a toss. That's why there will be significant of difference in backtest results versus the actual result. So there is no other way to improve this except experience. Now the last element is trade journal. It is so important to review our trades on regular basis to understand where we are making mistake. After a couple of months of review, you will be able to answer yourself whether you are suitable for scalping or swing trading or investing. Also, this review helps us know which other element we are performing poorly, whether it is risk management or strategy or emotional balance. So all these elements that we have discussed so far are common to all the traders and investors, irrespective of which trading method they follow. To summarize, let's say you picked up one of the strategies like maybe VWAP or moving average or super trend, whatever it may be. Before taking a trade, you need to prepare a trade plan and you need to see whether you have the right position sizing. Do you have the risk reward in your favor? Are you going to maintain the stop loss in the system? Can you wait for the target? So you need to have answer for all these questions. Finally, if you want to become a trader or investor, you need to focus on all these elements. This will definitely take time. People think that making money in trading is easy if we have the right strategy. But if we lose a couple of trades, we feel that this strategy is not good. So we should move to another strategy. And people keep moving from strategy to strategy, and the cycle will never end in stock market. So let's not focus on the profits, instead focus on the process, and slowly we will reach the target. Let us focus on improving on all these elements that we discussed today, and this will make us definitely a good trader. The feedback is appreciated. I hope the content is helpful for you. Please subscribe and hit the notification bell to stay updated on future uploads. Thank you for watching.